Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York on Monday, the 8th day of September 2014, and this is the daily report for gold and silver. Starting the week off with a bang, dramatically lower pricing across the board in the precious metals markets. Equities are down, dollar is stronger. Gold currently trading $12.55.65, puts it off roughly $12 to $13 on the day with a low of $12.51.60 and a high of $12.71.60. Silver also trading lower this morning, just above $19, but above it ever so slightly, down about 17 cents on the day, the low $18.90, the high $19.31. More on silver in a little bit. There's no doubt we have an interesting start to the week. We'll look at our gold chart in a second. This is the dollar chart, daily index, and the dollar right now has risen above a one-year high. We talked about the fact last week that it was quickly approaching that top just in the high 83 level. Also, potential ceasefire in eastern Ukraine. Those two factors kind of coupled together really have put a lot of bearish pressure on the precious metals markets. Let's take a look at our gold chart. And we are looking at a daily chart. There's no doubt you can see a pretty dramatic drop in the market price. What to me is most important is there were a couple of indicators, two key factors we were looking at to see if any kind of support would form in the market. The first was this long-standing support line really created from the series of lows, recently one in June, one at the beginning of the year. We tumbled through that at the end of last week, but at the same time, we were just meandering above this last final kind of foothold, which was a 61% retracement, and it is a retracement of this long $200 rally. We've clearly now broken through that. So, in my estimation, there's only a couple of places this market can really go for in terms of looking to find support. I expect lower pricing ahead. The first area is just at this particular bottom here. If we break that bottom, we no longer have any kind of series of higher lows. Now, we still have these series of lower highs. You can see that here, here, and again here. So every time this market has dipped and moved back up, we've had these series of lower highs, but we were also getting a series of higher lows. That could easily end if we break below this 1240 area, and that is what I do expect the market to test, is going to be that particular area. A move below there, as I stated on our chart this on Friday, as well as our weekend review, has got to be around 1230. We'll see if it could find support there, if in fact we see this market continue to move lower. Now, we did have a off or a soft day in the equities markets. Weakness in the equities markets could be considered bullish for gold, but as of yet, we have gotten nothing but indicators and signals telling us that this market is probably going to head lower still. So another strong technical indicator that we're probably going to see lower pricing ahead is this Andrews pitchfork. Now, we use this Andrews pitchfork pretty much for 2012 through 2014 as the market cycled through and cycled lower. It seems to stay within this channel. In terms of the channel itself, that's our 0 prong, and this is our 100% prong. Now, as this market came back up, we had this one fake out, but we had truly a point in which the market did break above and is still trading above that channel line. So what we did is we added a modified shift, Andrews pitchfork, and the reason we do a modified is the angle itself is much less steep. We were following along fairly good. In other words, came up to the top 50% of this channel, but as it came down to challenge the 0 prong, we absolutely broke through. Now, a follow through with that means that we're probably going to come back down and test this 0 line and see if it can hit the 0 line in terms of some sort of support and then bounce back up. But as I said, traders, the technical indicators we are looking at right now are signaling lower prices. Now, that could, of course, end in a heartbeat if fundamental news out there changes dramatically. However, as of this time, we do believe that we're going to see sideways to lower pricing in both gold and silver. So traders, you really get a dynamics of this current market activity and trend when we look at our COMEX contract of gold. And the reason being, especially in candlesticks, we have true opens and true closes on this particular chart here. When we look at this chart, what we do see is a 2-day pattern, which is an engulfing bearish. There's no doubt we've got a tremendous range. Market is trading near the lows, but we're trading now at 56, and you can see that these lows right in here came in at around 51 on the day. Next, we look at a monthly chart, and on the monthly chart, we're just trying to get really as much as we can of the big picture, and you can really see the dramatic decline that we've had, these series of highs coming in the market. Now, in terms of our major support, our support really is being fixed off at 2 points, this point here and this low here, and there's absolutely no doubt we are getting near the apex of this, and it absolutely appears as though we'll probably see a break to the downside. We'll have to see how all of this really unfolds. The dollar cannot continue to go on forever climbing, but it certainly could strengthen for quite some time. So traders, we also talked about the equities markets in the relationship to gold. As the equities markets gather steam and moves to the upside, of course, that seems to be a more logical place to place a vast percentage of your portfolio. We can see this dramatic climb. This is, of course, the beginning of August. Market had hit that top at around 1980, moves back down about the first week. And so throughout the month of August, we saw this dramatic rise above the former top to the market. But as it got to the top, we started seeing some real resistance come in. That's these series of highs. This, of course, is a daily chart. You can see that roughly at around, on the S&P, 2010, there's some real resistance. So the real question we want to ask ourselves is, whenever you see this type of activity in which you get a clustering around the same price, after a dramatic rise or after a dramatic fall for that matter, you can be looking at one of two things. The market is obviously consolidating, and it's consolidating in a way that we could see it pop back up. You get that consolidation and it pops back up. You get that in very, very bullish markets. In a market that is trading within a range, however, if you see this kind of activity, you almost certainly are getting to the top and going to see the market come back down. However, because of the fact that we are looking at record tops, and we've seen this in gold, we've seen this in the dollar, you get that period of consolidation before moving higher. And so my sense is that we'll probably see that in the equities. We haven't gotten that big correction that everyone's looking for. If and when, or I should say when that does occur, or if it does occur, then we can see that adding a little bit of positive momentum to gold. However, up until that time, as I said, I am looking at lower pricing. So I wanted to briefly talk about silver, and typically when we look at this daily chart, we have it blown up. We have a series of fib retracements. As you know, it is below the 76% retracement, and the retracement, of course, that we had plotted was of this one particular rally here. However, when we take it in real context, and that is the dramatic activity over a couple of years, what really becomes clear is we get a series of tops in the market, this at around 24, 22 here, probably just below 22 here. At the same time, if we take a look at these series of lows that we've gotten, I'm just going to try to line that up. 18, you really don't get the market touching that at all. This is at 19 right in here. And you can see a couple of occasions here where it does act as a supportive area. Also here. Here it dips a little bit below that, and now we're once again at this point. Now, the reason for looking at it in this way is as follows. If $19 holds, and that's just where we're trading at, we could see a bounce back up That's not my current take on the market. My sense is that we'll probably break below $19 per ounce. And the thing about it, and this is all on a technical basis, nothing to do with any of the fundamentals out there, but if it does break through 19, it really has the opportunity on technical basis, in my opinion, to go and retest $18 per ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update review. Bye-bye.